Good afternoon, everyone. On behalf of our founders, John Robbins and Jim Paterson, and the member companies of Discovery Group, sorry, I'm supposed to talk into the mic, I would like to welcome you to our Discovery Days Gold event. I'm Rita Bennett, and I thank you for joining us for the second type of this event that we've been holding this year. With each event, we hope to improve, and I want to personally thank everyone here that provided positive feedback from the last one and gave us some suggestions to make everyone better. So our aim for these events is to provide investors, advisors, and other industry professionals with information and education on investments in the sector that are not commonly discussed in detail to use as tools. In doing so, we hope that this will encourage communication and collaboration amongst those that are stakeholders in the mining sector. One such proponent of bringing the right people and projects together and encouraging the building of networks in the industry is John Robbins, our co-founder and principal, who I'd like to welcome to say a few words.
Thanks, Rita. So in terms of making things better, I was told I should prepare a bit more and read some notes, which I didn't do this time. And talk into the mic. Yeah. Anyways, I want to thank everybody for coming. It's great to see everybody here. As Rita said, we've done a few of these in the past, and I think it's a great opportunity for people to share ideas and learn a bit more about some of our companies, but also learn a bit more about the sectors that we work in. And of course, the last one we did was on critical metals, and this one is a gold focus. So first of all, Randy Smallwood was kind enough to agree to give a keynote talk to us on, the gold market. I'm sure we're going to hear a bit about the World Gold Council. So very excited to hear about that. And then we decided to take some of the companies that we have that are focused on right now on the early stage sort of side of the exploration spectrum, what investors should look for when making investments in companies like that, and then a bit of exposure to some experiences with the discovery/development stage. So Chris Taylor, we're fortunate enough to drag him out of retirement. So he's going to give us a bit of his perspective on things. So that'll be interesting as always. Fred Bell, who's with Elemental Royalties, couldn't join us here. So we have a pre-recorded spiel from him from London. And then lastly, Paddy Downey was kind enough to come and give us his perspective from the gold producer standpoint. So I think it's going to be fun and lots of opportunities to ask questions either during the talk or afterwards. You can pin these people down and get their perspective on things. So one other thing I'd like to say, we have a new entrant into the Discovery Group, a company called CopperX. Dave Prince, I'm not sure, there he is, hands up. Not quite sure yet if it's a copper company or a gold company. I guess the results will tell on that, but new entrant into the group focused on gold and copper in Chile and Peru. So I encourage you to drag Dave aside and have a quick chat. He can speak very quickly, so you'll get everything in about 30 seconds from him. And with that, I'll pass this back to Rita, and Rita can do the rest.
Thanks, Judd. So thanks for doing that, John. I would like to take this opportunity again to remind our speakers to speak directly into the microphone during their presentations. Last time I got in trouble for my team is people couldn't hear me very well. What my team fails to remember is that I'm really soft-spoken and generally quiet in nature. And one Mr. Eric Coffin, who said that, accurately described me as a delicate, shrinking violet, I think it was, Chris. So it's to be expected, but I will try my best to speak louder and encourage our presenters to do the same. So, as John mentioned, the theme of today's event is investor considerations at each stage in mining, specifically in the current gold market. So one of the foremost authorities to speak to the gold market is none other than Mr. Randy Smallwood, Chair of the World Gold Council and President and CEO of Wheaton Precious Metals, where he was involved in its founding as Executive VP of Corporate Development. Prior to this, Mr. Smallwood was Director of Project Development with Wheaton River Minerals. I always trip up on that. Through to its merger with Goldcorp in 2005, and was an instrumental part of the team that built it into one of the largest and, more importantly, most profitable gold companies in the world. Please join me in welcoming Randy Smallwood as our keynote speaker for today's event.
Thank you. I got told I have 15 minutes to share everything I know. I'm not sure I can fill the 15 minutes, but we're going to give it a go here. So I'm going to punch through some slides here. So I'm going to start off, first off, former chair of the World Gold Council. I stepped down in September after 3 years. It's normally a 2-year term, but we got lots to do. And to be honest, we still got lots to do there. And hopefully through the course of this, you'll understand about some of that stuff. And I might even squeeze a word in on Wheaton, considering they pay my salary and my chairman's here. So, but we'll start off with just gold. A couple of comments on gold. How's the mic doing? All right. There we go. I love this title. We've made some changes in our investor relations department, and all of a sudden we're getting exploring the timeless allure and modern significance of gold. Hopefully through the course of this, you'll understand a little bit of that. Why gold? This is probably preaching to the converted here, in most cases here, but there's just so many arguments behind why we need gold in today's world. Someone make space for Mr. Brown. There's got to be a chair for him there somewhere. Good to see you, Peter. Why gold? There's so many supporting factors in favor of it, and so little against gold in the sense of what it can deliver for us, what it has delivered forever. It's a good solid store of value and a measure of value that has been used for thousands of years, is fully transferable, one of the things I do find with gold is that it's typically North America and Europe where you sort of get in the question about gold. You go anywhere else in the world and everyone knows what the purpose of gold is, right? And so let's not forget the relative stability that we've enjoyed in North America and Europe for a long time. Maybe appreciate that. But you can see how gold has done compared to just about every other form of investment over time. It has preserved value. And I would say that over the last 20 years, we've been in a pretty continuous bull market since back in the early 2000s, when gold was down, I think at 265 was sort of the bottom there's definitely some volatility along the way, but it's been continuous up pressure. And here we are at near record levels, and in most of the currencies around the world, record levels of gold pricing, and it still doesn't feel frothy. It still doesn't feel strong. We still have strength behind it, right? So, not on this slide, but every time you hear this BRICS organization coming together, you sit and look at that group of countries and you try and understand what kind of political alignment you have amongst that group of countries. There is no political alignment. You don't have Brazil, India, China, Russia. The only thing that they have in alignment is that they're concerned about the U.S. dollar. And that's a pretty significant part of the world's population that is looking for an alternative. And so, gold is going to play a role in that. It already does to a certain extent. We're seeing that in sort of record central bank buying, higher than it's ever been over the last couple of years, and good, strong purchasing. And these are graphs that most people have seen, but they just reinforce the fact that I do really believe that we are setting ourselves up for a new level in gold and what it actually does for society. The World Gold Council, it's an advocacy group for gold. The board members are about 65-70% of worldwide gold production is represented at the board of the World Gold Council. And it's a very well-funded advocacy group. It created probably I always say it's the most profitable nonprofit that I've ever seen, because it owns the GLD and the GLDM, which still control close to 70% of the gold ETF market. And so it collects pretty healthy fees off of that. And I have to say that when I came on as the chair 3 years ago, I had the benefit of also having a brand new CEO coming into the space. And so it was a great time for us to sort of do a bit of a reset. What are we going to do? What are we going to build here? What influence are we going to have going forward? The World Gold Council has always been really good at the research and the marketing and sort of building up trust and, working with government policy, educating. I mean, the central bank education programs that they run, where they bring in the diplomats and bureaucrats that work for the central banks to try and educate them on gold. They're now getting record attendance at these things, and they just ran one in Austria where they had 250 representatives from various countries around the world buying into it. So they do a really good job on that front, but that's not enough, and especially when you've got extra capacity in terms of the fees that they're making on the GLD and the GLDM. And so, we did kick off a pretty aggressive marketing campaign about 2.5 years ago. Pretty healthy dollar amount number behind it. Hopefully you've enjoyed some of the ads and some of the marketing. It's kind of trying to sort of put gold in its place in terms of a good, strong, stable platform. We're not chasing the volatile markets. We purposely didn't go after crypto or anything in that space. We'll let that shape itself. But just to remind society about what gold, what the role that gold does play in space. And so, probably one of the more recent successes on building up this media presence was we just 2 weeks ago released Gold, A Journey with Idris Elba. We had the release party in London during LME week, on the Thursday of LME week, and I think we're close to 2 million views on this now on YouTube. It's highly recommended. In fact, we're going to have a release party. I'm actually bringing David Tate, the CEO of the World Gold Council, here for the next Vancouver Mining Collective on, we haven't officially announced it yet, but it'll be December 12th. And we're going to have a screening and then a panel discussion afterwards to talk about what your World Gold Council has done for you lately. And so we'll dive into that a little bit more, but we'll have a good screening. But it is available on YouTube. Highly recommend it. It's really well done. Idris Elba is the new... in my eyes, the new Morgan Freeman in terms of the trust that he has. And it's a great story, and it talks not only about the mining industry, but about the communities and the benefits that put into that. And so, but that's not really what I'm excited about at the World Gold Council. What I'm excited about is this initiative. Gold 247. 247 stands for 24 hours a day, 7 days a week. We sat and looked at how gold is traded, and in this digital world, to think of 3 or 5 day settlement periods, come on, we can do better than that. Society, the technology's there. It's time to improve the way we trade gold. It's time to digitalize the way we trade gold. And so we've got a really strong initiative, and there has been for-profit enterprises out there that have come up with gold-backed stable coins that are, along the same lines. The challenge there is lack of trust, unregulated, and pretty healthy fees, such that, it'll never have that sort of high liquidity. You'll never build that in the space. Here, what you have is a nonprofit organization driven to push this forward. And so the first thing we have to do, though, is build a good provenance database, which is this gold bar integrity platform on the bottom left here. And that's a blockchain-based system where all of the members of the World Gold Council are now entering their production into. Where's that Dory bar? Tracks through. He knows which refinery it goes to. The refinery then enters, what feeds into each finished, fully refined bar, and we're building up that database. So we have provenance track records. So you'll be able to track the gold and have good, strong provenance and trust about not only where that gold came from, but when it came. You could even expand it to talk about all the benefits that came with the production of that gold in that remote location. You could tie it all the way to that. So this is a good, strong program that we've combined with the LBMA and a few other members to push together, and the entire group is focused on advancing and building up that database, and that's really the foundation that we need to come up with a digital token that is backed by gold. You don't have to move gold around. You can keep gold in a vault and have a digital token that represents fractional ownership of that, and move those tokens around, and the accessibility of that, the instant settlement capabilities of it, where you're not having any settlement, all of a sudden it becomes a financial instrument, and fully fungible, lots of trust, lots of provenance behind it. Just think of where that can go. It doesn't take much. You blow your eyes and it starts to look like a gold-backed currency, which we haven't had for a long time. And just think of the potential. If we can get gold to the point of being a instant, fully fungible, fully trust. I mean, trust is one of the key things. I love the story about Costco. Costco is one of the most respected retail names in North America. They've tried a couple of times to sell gold, and it sells out so fast. And that, to me, argues the fact that people want gold that they can trust, that they can ownership, that they can have confidence in and faith in. And I just think that this whole initiative, it could really revolutionize the way we think of gold. It could all of a sudden start replacing some of the fiat currencies in space. One of the concerns I have is that if it takes off so rapidly, we could see such a rapid appreciation in gold that some would point to that and say, well, that means it's not as stable as a good fiat currency because it's got that. But that would be a problem we'd all love to have. Gold at $5,000. I'm sorry. But, we're setting up this framework. And I will say this has taken a lot longer than I wanted to. I kind of tend to be the guy that cracks the whip and someone else has to do all the work. I will say that the focus is to try and do this with the institutions and with the regulators. We want this to be accepted. We don't want to do it. If you sit and look at what's happened in the stablecoin space and in any of that space, you're trying from the retail side to sort of make things work. Our approach is the other way. Our approach is to work on the institutional side and bring in a lot of the bullion banks and the regulators and the traders and get their support. Co-author this system, and I will say that that's taken time because we're getting the JP Morgans and the HSBCs and the ICBCs and the UBSs and Deutsche and all the bullion trading banks. We have to get them to all line up and work together. But we do have a working group. We call it jokingly the G20, but for the gold 20, that is now well on its path towards co-authoring this thing and kind of having this thing come out over the next while. So this is, I think pretty exciting. I'm hoping, as Cam's looking at me, come on, man, hoping sometime next year it should be moving forward. But we do want it to be embraced by the institutional side because we think that if we can get it set in that space, it'll spill out into the retail space and get that higher level of trust behind it. So it's pretty exciting, and I do think that the potential in terms of what we can do with a well-funded organization, advocacy group like this, we can truly change the way gold is viewed in this world. So I expect to see you guys all on December the 12th at I don't even, we haven't even set the venue yet, but it'll be we're going to have a showing of the film. It's 65 minutes, and then we're going to sit down and have a good presentation with respect to Gold 247 and where we stand. And I'm bringing David Tate in from London to have that panel discussion, and I think the next year or so could be pretty exciting. So. As I said at the start, I am going to toss in a few words about Wheaton, mainly because I have to defend myself against Patrick Downey, because I know later on today he's going to critique the streaming side. Gotta say, hey. We're busy. In fact, I think we just announced another deal this afternoon. We've got lots of opportunity. The streaming market is one of the best. I think it's a very, very competitive source of capital for anyone in the development stage right now in terms of what we're able to deliver to the industry. There's so many advantages, and especially compared to the equity market in the space. If you're an operating company, you've got access to operating cash flow. Even debt's getting a little bit more expensive now. But if you're going to fund growth, a stream is a fantastic way to go forward. As John mentioned earlier on, a little confusion about copper versus gold. We love companies like that. We can help you. We can make you a copper company. That's... There's a long list of, I think, why streaming works as a source of capital, outside capital, to the mining industry, and why it's so attractive right now. You look at the equity markets. We all know how bad it is. No more comments required. Debt, a little bit more expensive. But, streaming, we're long-term investors in these. I was joking with Mark Bristow that maybe the market doesn't recognize what long-term investors look like anymore. I think they might be streaming companies, because we're life-of-mine investors into these assets, and we are selective. But when we're there to help partners do as much as they can over that period of time. But there's really only two items that I think really sort of stand out from a streaming perspective right now. And that value creation, and as we said, the way the markets are treating the developing companies right now, the PNAV, what they're trading at, the arbitrage in value between them and us is probably bigger than it's ever been, which makes streaming that much more attractive, because a stream is basically, we're buying it for the value of the metal, not the value of the equity. And that's a huge plus when you look at what the equities are trading at, right? And then, the fact that we dramatically improve the rate of return that you deliver back to your shareholders. The Salobo example is a fantastic one, where we paid 78% of the capital to build that mine. We only take 23% of the revenue away. The Salobo shareholders make their money back every year, and it's a 40-plus year mine life, right? And so it's a good, strong business model in terms of being able to deliver that strength, and, as I say, make a good mine a great mine in terms of going forward. From the investing perspective, I don't think it talks about what we deliver. We do focus on good quality assets. That, of course, by virtue of the fact quality means high margin. High margin means that's where exploration and expansion dollars get spent. And so, whenever companies are looking to grow that, if they're generating big margins there, they're always going to push that hard. Good predictable costs, which is one of the things that is a huge advantage of the streaming and royalty space. Commodity price leverage, we do have that base production payment. Good strong dividend payment, and lots of optionality, lots of assets that we're investing into. So we have been busy. As I said, we now got 14 new deals at just over $2 billion after what we announced this afternoon, and it's a good, strong company. I think I'm actually proud that we were able to build this out of Vancouver. I think it's something that we should celebrate in terms of what we've been able to do and how much impact we've had in terms of supporting the broader mining space. And so, I just do think it's, getting back to gold, I do think this is a great way to invest into precious metals, into gold and into silver. So I think I'll finish off with one last slide that sort of summarizes, if you like precious metals, we do check all the boxes. We are really focused on building good, strong partnerships with strong operators on high margin mines, and find ways to continue delivering that value even beyond. And so there, hopefully having my paycheck.
So next up, we've got Anthony Margarit, who is president and CEO of K2 Gold. K2 is a grassroots exploration company that's a member of Discovery Group and is currently actively working on 3 projects, despite the need for sleep, as well as in these market conditions. Anthony will be discussing the specific variables that investors in this stage of mining exploration should consider, and will also be sharing some brief highlights and upcoming catalysts about K2 Gold. Anthony Margarit.
Thank you, Rita. All right. I don't have to introduce myself after that, but thanks, Rita. So here we go. All right. This afternoon, I'm going to be speaking about the benefits of investing in greenfields explorers. All right. Greenfield explorers are generally classified as companies in the exploration stage that do not have a project with a resource estimate. Their success relies on making new discovery through drill programs. The highest potential return on investment comes from buying a junior when they're in the exploration stage. Great drill assay results can send a junior's share price skyrocket. A lot of this is going to be a review for most of the people in here. As a low cost of entry, most companies in this sector provide a low cost of entry, which leads us to the next point, the ability to spread your investment dollars around a number of companies, diversifying your risk profile. The basket investment approach. Spread your investment across a number of prospective companies. Only one of those companies needs to make a discovery in order to deliver a significant return. Now let's look at precursors to success. Management and technical team. Is management and board of directors experienced? Has management been involved in a significant discovery or acquisition? Project pipeline. Does the company have a portfolio of projects at different stages of maturity? A healthy project pipeline includes projects that span from grassroots target generation projects through to more mature projects that are beginning to show evidence that a significant discovery could be around the corner. Are projects analogous to other significant discoveries? Is there evidence that supports the idea of the company's project being analogous to an existing discovery or resource? Is the location of the target area fertile hunting ground for this deposit type or commodity? A project with a direct analog in a geologically similar environment presents less risk than exploring for an unproven target model in a new geological environment. Now we'll move over to potential red flags. Lack of project focus. Is a company focused on one commodity or geographic region, or many? If it's many, do they have the technical and financial capacity to adequately evaluate the projects effectively? Distracted management. Is senior management involved in a number of different ventures? Does the management and technical team have the capacity to evaluate the projects they're operating? Are they able to dedicate the time required to successfully market and finance the company in question? And finally, inability to raise capital. Has a company struggled to meet their financing goals recently? These examples aren't all-encompassing. They're simply a few examples taken into account when considering the benefits of investing in greenfield explorers. Okay, I don't have a lot of time, so let's move on to K2 Gold. And here we go. I've left a stack of business cards outside there. If anyone wants to reach out to me with questions or emails, please pick up the phone and give me a call. There's a couple hats too if anyone wants some. And let's get into the projects. I wouldn't classify K2 as a true greenfield explorer, as once we're through the permitting process at our Mojave project, we'll be starting to build a resource for our phase 2 drill program there. K2 has 3 projects in its portfolio, one in the Yukon Territory, one in Nevada, and one in Inyo County, California. I'm going to start out with our Wells project in the Yukon because we just finished a 12-hole drill program up there a few weeks ago, and we're eagerly awaiting assay results, which I was hoping to have for this presentation, but the first batch is not yet complete. The Wells is one of the best underexplored gold systems in the Tintina Gold Belt and the Yukon. The targets of the Wells project show strong similarities to Newmont's Coffee project, which was discovered by K2's predecessor, Kaminak. K2's vice president, Eric Bidenheis, who's around here somewhere, there he is. Eric was involved with Coffee project from discovery through acquisition with Goldcorp. And Jody Gibson, in the purple shirt beside him, K2's chief geologist, was responsible for most of the white gold discoveries with Sean Ryan's group. Our team's got a pretty solid track record in the Yukon as well as abroad. Also, I think Rob Carpenter's around here somewhere. Rob was former CEO of Kaminak. And Chris Taylor acts as an advisor, as does Rob Carpenter, both advisors to K2. We understand the geology in the Yukon. We've seen these rocks before. We recently completed a proof of concept RC drill program at the Wells property. We initially planned to drill 10 holes, but we completed those ahead of schedule and under budget, allowing us to complete 2 extra holes. We were able to test 5 new targets, and it should be noted that only 40% of the property at the Wells has been explored. We're expecting the first batch of results from the Wells to be out by the end of the week, and look for news next week. Next, we'll move on to our Mojave project in Inyo County, California. K2 drilled Mojave back in 2020 and returned some of the best results in the southwest U.S. over the past decade, including a highlight hole of 86.9 meters of 4 grams per ton gold, all oxide from surface. Fantastic hole. All 18 holes in the previous drill program were very strongly anomalous. We're currently progressing favorably through an environmental impact statement permitting process and anticipate the EIS to be complete by spring 2024. We just completed a 60-day public comment and scoping process, and it went very well. Upon successful completion of the permitting process, K2 will embark on its phase 2 drill program encompassing 120 holes drilled off of 30 drill pads with a goal of building a resource at Mojave project. By permitting this project at the highest possible level, we will significantly de-risk the project moving forward in the eyes of potential suitors. This is an incredibly exciting project with remarkable potential, and we look forward to getting back to work there. And finally, our SI2 project, located in Esmeralda County, Nevada, about 60 kilometers west-northwest of Tonopah. The SI2 project's focused on a massive 8-square-kilometer alteration system. SI2 displays many similar characteristics to AngloGold Ashanti's Silicon project, which is an 8 to 10 million ounce gold project, a little bit further south outside the town of Beatty, Nevada. Both SI2 and Silicon are preserved epithermal systems and were initially identified and staked by the same project generator. K2 completed a 4-hole maiden drill program at SI2 this spring. We were successful in proving the existence of a gold-bearing epithermal system at SI2. Although we didn't return the bonanza intercept we were hoping for, we did intercept 185 meters of continuously anomalous gold mineralization, demonstrating that the system was moving a broad swath of epithermal fluid, gold-bearing fluid. The next step will be finding where that fluid was concentrated in the trap, potentially hosting significant volumes of high-grade gold. I'm almost out of time, so our final key drivers are the assay results coming in very soon and through the rest of October and November from the Wells drill program in the Yukon. We're progressing favorably through the EIS permitting process at Mojave, and we're actively involved in conversations around creative, non-dilutive opportunities to finance continued exploration at the SI2 project in Nevada. Thanks very much for your time, everyone. I appreciate you guys coming out tonight, and if you have any questions, I'll be around. Come find me. I'd like to talk about it in more detail. Thanks.
So next up, we have Colin Smith. Colin's the CEO of Gold Basin Resources, an advanced gold explorer, and also a member of Discovery Group that's focused on their large and underexplored gold project in northwest Arizona. Colin will be sharing his experience both as a scientist to love and executive in recognizing the precursors to success and the red flags to look out for when investing in this advanced exploration space. He'll also give us some insight into the work that GXX has underway within about 6 minutes, is what he'll do. Thanks.
Okay. Thank you, Rita. Thank you to the Discovery Group marketing team as well. I know it's a tremendous amount of work to pull us together, so much appreciate your efforts. So indeed, I'll be talking about the advanced explorers, and ultimately one of the things that we have the luxury of doing is leveraging historical investment. So typically, numerous previous operators have spent tens of millions of dollars, not on AV, but on drilling, geophysics, geochemistry. Ultimately, those are dollars we don't have to raise, we don't have to spend right away. We can just leverage those and ultimately add to them with our own financing, but ultimately it's a big asset to have. It de-risks the project. It allows us to allocate our money in more direct ways. We also have catalysts like resource estimates, economic studies. Those can drive value for shareholders in the market if they're favorably received. And last but not least, I think certainly in the case of Gold Basin and a lot of us advanced explorers, we still have the opportunity to make new discoveries. So that tangible value accretive upside is still present for a lot of us. Okay, precursors to success. What do you think? Okay. Jurisdiction is a big one. Okay, so you need to be able to explore your ground. Ultimately, you need to be able to permit the mine. So having a clear permitting timeline is a key thing. I'm just going to see the next one there. Having so exploration model. Have an exploration model that's designed to find a mine. Okay, at this stage of the story, you really shouldn't be drilling too many academic drill holes. You want to be finding a mine. You want to be adding ounces to resource, pounds to resource. You want to be driving the economics of the next step. Metallurgy is a big one. Okay, so if it's a conventional metallurgical scenario, show that's the case. If it's not, de-risk it and show that there's a path forward for it. Critical. You guys do the same thing. Okay. Exit strategy. I mean, Chris will be speaking to this next. I think it's important for management at this stage of the game to have an idea of where you want the project to go. Do you want to develop it to the point where you're actually producing from the asset? Do you want to de-risk it and then sell it to a developer? Some of us need resources before we sell the asset. Some of us don't. But ultimately, I think it's important for the management to know where it's going to go because you can better allocate your funds to get to that point. Okay, so red flags. The first one's a big one. Do the deposit characteristics are the ill-fitting of the location? For example, if you have an asset that's neighboring to a producing mine, you can probably get away with a lower grade, maybe a deeper deposit, a lower tonnage, and it'll still be an attractive asset for that developer to take out. If that same asset is in a very remote location, it's probably not going to fly, right? You're going to need basically a tier 1 asset to, high grade, long mine life, big tonnage to make that work. So, make sure you know where it is and the characteristics of the deposit and whether or not those line up. If there's a lack of a robust geological model, does the management and technical team know what they're looking for and how to find it? In markets like this, exploration dollars are tough to come by. You want to make sure that every dollar, every sample, every drill hole is well placed. Community, indigenous, and permitting issues, any one of those, as we all know, can stop a project in its tracks. So you got to make sure that all those are in check. And it's not to say that challenging locations can't be overcome on this front, but certainly if all three of those are not in alignment, you're in tough shape. Insider ownership. So if there's minimal insider ownership, are they really incentivized to make this project go and make it work? Are they there for a paycheck, or do they want to win just like the shareholders? Do they participate in private placements? Do they own stock? If they don't, think twice maybe. Something to consider. So as far as Gold Basin goes, I really think we check all these boxes. We have a single asset. It's in Northwest Arizona. We're advancing a number of at-surface flat-lying oxide gold deposits. So ultimately, it'd be an open pit, heap leach gold sort of development scenario. The metallurgy sound, the infrastructure is awesome. We're right off the highway, an hour and a half south of Vegas. We got highway power lines crossing the southern portion of the project area. And so that's super helpful, of course. In 97, it was actually fully permitted to go into production by a company by the name of Nevada Pacific Mining Corporation. Unfortunately, Bre-X also happened in 97. Obviously tanked the markets. That company ended up delisting, and the project sat offline for 2 decades, so it never went forward. But ultimately, we have these sort of the nest egg resource zones that we're working towards. We also have 42 square kilometers of highly underexplored ground. Got a great geologist who's in the field every day. He lives 40 minutes from site. He can map all day and go home for dinner. Pretty awesome. And insider ownership is huge. We're about 20% fully diluted. We all participate in a big way in every private placement. My wife came in Q1, so I'm very incentivized to make this work. But it's, we're all big believers in the asset. So key drivers, we're working towards a maiden 43-101 resource. With every drill program, we expand these deposits. We just want to drill more holes at this point. The potential for new discovery is very much intact at Gold Basin. We're de-risking things like metallurgy, water, permitting. It was permitted in 97, so it certainly bodes well for the next stage on that front. And, as far as I see it, it's really all the hallmarks of a low capex, high return, oxide gold project, and hopefully the next one to go into production in Arizona. So thank you very much for your time.
So as we move along the mining exploration stages, we wanted to hear from someone who could provide some helpful advice to investors on what to look out for when considering investments at the development stage. With his recent successes at Great Bear Resources, and you may have heard of this company, it was a junior that was acquired by Kinross Gold for $1.8 billion. Last year, we kind of thought like maybe Chris Taylor, former president and CEO, and my former boss, would be able to share some insights about smart development stage investment. So everyone, Chris Taylor.
This is it's a bit of an odd experience actually to be in front of a room of people again. I'm out of practice after a year. I did promise my wife I'd take a year off and just kind of spend a lot of time at home, so I did that. And ran sort of like as one of these people that doesn't really have a job anymore. But I basically thought, Rita asked me to do this, and I thought, sure, I'll see what I can contribute to the discussion. So, benefits of investing in developers. Well, these are greatly de-risked relative to some of the early stage stories. So, generally, if you're in the developer category, you've gone through the different studies and everything else that you need to do to get it to the stage where you're appealing as a potential target for one of the big major mining companies. You don't you don't invest in these guys for the 10, 20, 100 baggers and whatever the reaching for the stars type Great Bear scenarios. So these would be the steady sort of 2 or 3 times your money. If you got a good management group, you should also be limited on your downside. Everybody likes to throw around the Lassonde curve. I think it is a very useful tool. Generally, once you're at development stage, you don't see that curve flattening out to zero valuation. Although, if we pulled up a map of, say, the Red Lake District, you would get to see what that looks like when you bottom out on the Lassonde curve during certain stages as well. So we've seen that, unfortunately, again and again. New experience to me, one of the perks of selling the company. Precursors to success at this stage, make sure that the mine closure permits and plans are in place. That's a big deal in Canada. You're not going to get a mine built unless you've got those things locked up. So ask your CEO, watch him sweat a little bit if he doesn't have a mine closure plan in place. Also, a lot of people like myself believe that we are infinitely flexible and can learn anything. So the fact that we can discover deposits means that we can build mines. We cannot. We absolutely cannot. So it's a good idea to go and find people that have experience, that have built a mine before. We can learn. Of course, there's exceptions. Maybe I'm just talking about myself in that case. Make sure you've got a great relationship with your First Nations groups. An IBA agreement in place is an absolute must. Infrastructure, if it's already built, is a huge plus if you want to be successful in this, or maybe just find your deposit right beside the highway. And then the jurisdiction that you're working in here, it's important that it's both investable. So if you're always competing for dollars in this space to get things built, unless, of course, you're working with the streaming company, and then you're still competing for dollars. So you're always competing for dollars, but make sure that the jurisdiction wants to see investment dollars, and make sure that they want to put that money in there as well. So it's like real estate, location, location, location. And then things that go horribly, heinously, egregiously wrong in the developer stage, convoluted mining plans. I had lunch with my friend Bob Singh, our old VP Exploration, 2 days ago. And we were talking about some mine plans that we'd seen recently where there was trucking of ore across a frozen lake. So this is winter road ore haulage in Canada. And Bob was saying that he had worked on a project there, and they had actually driven their equipment through the ice in the middle of the winter. So you can imagine a loading mining truck falling through the ice and settling at the bottom of the lake. So things like that are a good thing to watch out for. So little clues. And generally, just going off half-cocked, if you try to go into production off of a PEA or something like this, or, just early stage economic analysis, generally a very bad idea. One thing that's always a pet peeve of mine with the development stage companies is when too much money is going into promotion. And I can think of examples that I was discussing over bourbon and cigars 3 or 4 days ago, where the promotional budget was so high and it worked in the market so well for this particular developer that they ended up with over $1 billion market cap and a project value. They probably could have sold that company for a couple $100 million, but they'd driven the value up so high that there wasn't a single major producer in the world that would touch it. And that's a risk. So maybe you don't want to go over something like about 10% of your total budget into promotion when you're at this stage. The other thing is the CEO should be technical. I'd love looking at mining engineers in charge of a company at this stage instead of, other types. Even an exploration geologist would take second seat in my mind to a good mining engineer when you're trying to put things into production. And one thing that also is a bee in my bonnet is if you've got a single asset foreign project, I would love to see some of the management living near that project instead of just relying on a country manager to do all the hard yards for them while they sit in Vancouver and play golf and hunt pheasants and other things. So, and then Rita sent me a Great Bear deck the other day, and it was kind of funny to go through this. So this was the last slide. This is November of 2021. So when I look at this, it's kind of amazing because we were looking at the share price appreciation over the end. So if you're in the developer stage, and remember this isn't really developer, but you can get it to the point where I looked at this and we had a $1.1 billion valuation, or almost 1.2, and we grafted on the next month when we announced the deal, and John had a really good idea on this one as well, but we graphed on another $800 million of value to this deal after this slide was created. And, a few things that you want to look for when you're going through a developer company is share structure. You can see there, just before we went into the deal with Kinross, we had 57.8 million shares issued and outstanding, no debt of any kind. And I don't know, I saw Peter Brown in here earlier, but if you look at the share price graph, it's good to know some Peters in this world for many, many reasons, not just the wine glass consumption and wonderful stories, but in the COVID crash, I remember the shares just tanking down to, I think they were like at $8 or something, and they tanked down to like a couple buck range. And it was Peter that put in some calls and got, of all the people to buy the stock, Jimmy Pattison, Mr. Automotive Billionaire. And it was Jimmy's purchase that ended up stabilizing the stock. And of course, he made a whole bunch of money on that, which he didn't need to make. So the other weird thing is share ownership. Now, you would not typically see this on a development stage company, but we were 66% owned by retail guys at the end when we were taken over. And, I was going to mention when you look at development stage companies, it would usually be the inverse. You would have like 66% institutional, 30% retail at this stage. That would be something I would view quite positively. Here, this was like hours and hours of phone calls with guys that were like, oh my God, I own 1 million shares of Great Bear and I'm going to be a multimillionaire and I want you to tell me about it every single day for hours and hours. So that's great if you have the time for it. And what it meant was a lot of dog walks when I was walking up the mountain behind my house, like Grouse Mountain, and my wife was like, my phone would ring and she'd give me this awful stare with her icy blue eyes. Like she can actually freeze people to death and punch holes in them with those icy blue eyes. Anyway, the point was, I was like, Julie, I have to do this because these are guys that own our shares and our share price is being supported by the retail investor. So make sure that the CEO of the company, whatever stage it is, developer especially, is putting in the time communicating with the shareholder base. It's easy to get complacent and just imagine the institutions are going to support your prices. Those guys do not support your prices. It's the retail investor on the last trade that supports the prices. And if the CEO doesn't know that, he's not doing his job. So anyway, just some ranting and random comments. The other thing was part of that 800 million we grafted on at the end was a discussion we had at the board level, but the idea did come from John, Doug Ramshaw and others to spin out the royalty company. And that was a stroke of genius that ended up benefiting shareholders in a major way. So, and a few things, I'm just going to stop talking. I'm not good at time constraints anymore. So when you're looking at development stage or advanced stage exploration companies, three things that would be super, super useful that everybody could learn from. One of them is disclosure. So at the end, to get a bunch of analysts like on board, we ended up disclosing every single assay that we got back from the labs. So it wasn't just a composite interval, say you had from surface 18 grams over 15.8 meters. We put that out, and of course, a lot of people would think they must be smearing grade. I heard smearing grade, smearing grade, smearing grade. And I got so angry. I just wanted to, punch things, but I don't do that. I just go to concerts and breathe the air. That settles me down. So anyway, that's what we ended up doing was complete transparent disclosure of assays. That was certainly very useful. The other thing, scale and grade. When you're looking at projects, there truly is like an advantage to having both scale and grade. If you can't have grade, you better have size. If you don't have size, you better have grade. Those are good things to keep in mind. It's a bit of an orphan period when you don't really have either. And, Great Bear being such a success really comes down to the shareholder, the ownership on that map. And, I know when you publish like the results of the disputes and everything, this was our situation. And I got this slide from Kinross's presentation after they took over the project. But that was, this was Barrick that staked up all the land around us. And these are ultimately Kinross's holdings right there. So took years and years and years to build the competitive tension inside the deal. But ultimately market circumstances, geopolitics, a lot of good luck all lined up together. And it was, like a holistic, virtuous cycle at the end. So, comes down to good people. Good advice is what really got us here. I've got two of my advisors sitting right here on the red couch, looking at us, looking at me with knowing eyes. So people were the main factor, but ultimately we got lucky. We made a major discovery, kept the share structure tight, and we spent hours and hours talking to our shareholder base. And those are some of the main factors that you can grill your development stage CEOs about. So that's it. Thanks, guys.
So next, thank you, Chris. But naturally, we want to change up the order a bit. But when considering gold mining investments, one often thinks, okay, want to have some exposure not only to different stages for diversified portfolio, but also to different companies and projects. So we want to address some investor considerations specific to royalties. And I know that Randy had touched on this as well. And we're happy to share this presentation from Elemental Altus' president and CEO, Frederick, who's also a member company of Discovery Group. I would have loved to call Fred to do this in real time and have him speak in person, but I think it's about 1 a.m. for him, and he would have been really, really mad, and his wife would have been mad, and probably the baby would have woken up. So I'm just going to play this, and if you guys have any questions, you can reach out to Fred whenever you get a chance.
Hello, everyone. I am Frederick Bell, the CEO of Elemental Altus Royalties Corp. I'm going to give you a quick 2-slide presentation on the royalty model and why it's such a good model, and really for investors, you should look to get some exposure in your portfolio. So first off, the benefits to investing in the royalty model. The most important one is diversification. You can get diversified early on. And to give you an example, we started with one royalty in 2017 producing. We now today in 2023, we have about 10 producing assets that will be growing next year. And we're continuing to build out the portfolio. So we have approximately 80 assets now that we have royalties or streamed over in our portfolio. So you can really diversify far more. And if you look at us and our market cap versus some of the mid-tiers, $1 billion to $5 billion market caps, and they might have 5 producing assets, and we already have more. So that diversification is a key risk mitigation option. It also, the fact that you can get royalties on producing assets, it means that you can generate revenue in the royalty model far quicker than you can in most other parts of the mining industry. And I worked starting off in a junior exploration company to begin with in Australia and in Africa, and I saw the timelines of years through exploration and permitting timelines getting longer. So one of the attractions for us starting Elemental Altus Royalties at the beginning was the ability to get producing assets and diversified revenue early on. And the third point, which is probably very pertinent in today's market, is you get top line exposure. So generally speaking, you're talking about net smelter return royalties or gross revenue royalties, which come off the top line with a few allowable deductions. And that means that you don't have the same exposure to capital costs and operating costs. And so what you are seeing, I think, in the last 2 years is you've seen a lot of inflation in costs, which has eaten into the margins for miners. And as a royalty company or streaming company, you don't have that same exposure. So that is another great benefit of the model. Scalability is the fourth point. And I think for us, talking to the fact that we've grown, I think, at a sort of 70% rate in terms of revenue growth year on year since 2017, should give you an idea for sort of how fast you can grow the model. And there are plenty of examples out there of companies in the royalty and streaming space that have managed to really exponentially grow in terms of scale. And you don't have to grow your team at the same rate. So we're a pretty small, lean team now, and I think we could probably double in size and not have to expand our team a lot. So that's another benefit. And then the last one, and this is one of the most important, is the optionality you get on exploration success. And exploration success might be the biggest point, but you're also looking at technology improvements. You're looking at optionality in terms of throughput increases, production increases. So you are really getting yourself optionality on a whole host of diversified projects going forwards. And that's one of the key to the royalty model. So what do you need to be successful, and what are you trying to avoid and look out for when you're doing this? So I think in terms of what you would like to get, and probably one of the most important points is high quality operators. And the biggest maybe strength of the royalty model is not having to operate the assets yourself. The weakness, conversely, can be that you are dependent on the operators. So for us, we have the operator as one of the key criteria when we're looking at new opportunities. Uncapped royalties, you can have step downs in the royalties. You can have structures that the rate reduces over time, but generally speaking, you're wanting an uncapped royalty to give yourself optionality going forwards, and also to account for some of the royalties and deals that won't work. And you need that optionality to balance out that risk. Generally speaking, we like the royalty to cover the whole area. Otherwise, you have displacement risk, and the mine can be continue to operate, but just not in your royalty area. And that also means it can be harder to model, particularly if it's a private company and not a public operator and the guidance isn't there. So generally speaking, it's helpful if it's a royalty that covers the whole license and you don't have that displacement risk. Allowable deductions, and that is what can come off the top line. And yeah, there's a big difference between a gross revenue net smelter return royalty and a net profit interest. And allowable deductions generally are pretty small, but they can be unique to each royalty agreement. So really important to check that. And then security, and this can be security in the land. In some jurisdictions, Canada or Australia, that's an easier process to do. And some less mature mining jurisdictions, the mining code just isn't sophisticated enough to account for you to do that. So what kind of security you can get, that's really important as well to protect you on the downside. In terms of red flags to look out for, capped royalties, and that can be caps on production, it can be caps on the dollar amount you receive, time limits or expiry, the royalty can fall away at a certain point if it's not in production. Again, unique to each agreement. Partial deposit coverage, we touched on earlier about having royalties that don't cover the whole project. Operator buybacks, again, it's not uncommon to have buybacks on a lot of royalties. One of the downsides is obviously it can limit your upside. You get all the same downside risk, but if it goes well, it's very likely the operator will buy it back. So generally try and avoid that. And then first right of refusals, and this is probably more linked to third-party royalties in particular, but that's where we have done a number of transactions and right of first refusals where you put an offer forward and then maybe the mining company that operate the mine have the first right to buy it back. So a few things to watch out for there. In terms of elemental Altus specifically, I think having done a high-level overview, a few highlights here. We've done 8 transactions so far in 2023, so it's been a very busy year for us. And most recently, we bought a royalty on Arizona and Sonoran's Cactus project, copper project in Arizona. We created, I should say, a royalty on the Diba project, which is now part of Allied Gold's Sadiola mine in Mali, and should be the Diba project specifically, should be coming into the mine plan in H1 next year. And we also bought a royalty on it should be Teco's Pickle Crow in Canada. We did 1 or 2 producing royalties as well. We increased our stake in a syndicate on Caserones, which is a copper molybdenum mine in Chile that Lundine's acquired majority stake in this year. And in terms of our portfolio commodity mix, we're mostly precious metals, 70% gold, and copper is the second largest commodity at about 30%. And as I mentioned earlier, we're on track for about the midpoint of guidance is about 17 million US. And I think we're on track for that in 2023, which is about a 60% increase on last year. And we'll be putting out guidance for 2024. But again, should be a pretty good growth just from our existing portfolio without any other acquisitions. So what's driving that is I think 2 key assets, and that's Bonikro and Diba. And Bonikro really starts to ramp up from the royalty area at the end of this year. And then Diba, which as mentioned, comes on at the beginning of next year and should generate substantial revenue for us going forwards based on what Allied have guided. But also we have some milestone payments with that going into production. There is a PFS coming out on the Cactus royalty, which we recently acquired, that is scheduled for Q1 2024. And then we're actually in a pretty strong position to make new acquisitions. We're cash flow positive. We have about $10 million US in the bank. We have up to 20 million US currently on our credit facility we can draw as well. So we're continuing to look at new opportunities, and I think in this market we're seeing a lot of deal flow. And that is the summary really for the royalty model, and also a quick intro to Elemental Altus Royalty Corp. So thank you all for your attention and enjoy the rest of the evening.
Next up, and last but definitely not least, obviously, we have the esteemed Paddy Downey, President and CEO of Orezone Gold, here to share with us his observations from an extensive background. It's a few years in gold and gold mining's value to the world overall, as well as factors to look out for when investing in gold producers, both positive and negative. We also look forward to Patty's highlights about Orezone Gold and what investors can expect from the company in the next while. Please welcome Patty Downey.
Thanks, Rita. The last time I held a microphone like this, I think I was drunk in a karaoke bar. But how do I move this forward? He didn't tell me. Space bar? Okay. Yeah, I'm really not going to spend a lot of time talking about Orezone at large, but I really want to talk about some of the things that I've seen. I want to reflect maybe a little bit on what Randy said at the start about what gold does in the world at large. I mean, it is a store of value. It really is a currency, but we do a lot of other things that I think are really go unnoticed. It will always be at the forefront of development. Where does development come from? It's generally from a gold rush. It doesn't come from somebody wanting to open a Walmart store. It really comes from people going out to the nether regions of countries and developing it. And Canadian companies, and particularly junior Canadian companies, have been a force for good in that regard. There have been developments and things have happened in lots of parts of the world that have been caused by gold mine development positively. And there's a huge value add that seems to get ignored in this sector. We actually do a lot of work with communities and development and healthcare and education that really gets undervalued in the space that we work in. And over my career, and it's been a fairly long, I think I'm at the tail end of my career now, the crucial areas that add value is direct result of infrastructure. You know, we put roads where roads haven't been, water. I look at Orezone Gold and what we've done. We're really in an area that has 4 months of rain a year. The rest of the year, there's no water. And people struggle to survive. And we put in things like boreholes 90 meters, 100 meters into the subsurface that didn't exist before, and pump water using solar into vegetable gardens, agriculture, schools, hospitals that did not exist before this. They did not have access to it. They scrambled around looking for water. Renewables, we're putting in, as I said, solar power. We built, I think, 1,300 houses, churches, schools, clinics. We're building another 1,300, and they're all run off solar. And so at night, kids can read. They can actually continue their education at night beyond at 6 o'clock when the sun went down before. That was it. They were finished. But now they can actually go to school, continue to read, continue to study. Clinics can continue to run. At night time, people can be rushed to an emergency that before the chances of living were pretty low. Yeah, they had a vehicle to get there to another clinic 20 kilometers away. And who had a vehicle? Nobody. So governments don't do that. NGOs don't do that. We as mining companies do that. And we should actually reflect on that over the years of what we've done in places like this. Healthcare, as I said, education. You know, we put in night schools, as I said. We built school. We've actually built houses for the teachers so they don't have to come in and out because they've got no means of transport, or it's dangerous at night to drive. They actually live in the community now as school teachers and educate the kids. Pensions. We've got 1,000 people working for the mining contractor that now have pensions that had nothing beforehand. So they've got something to fall back on when the mining ends. Healthcare benefits. They can go to the clinic and not worry how they're paying for it. We do it. Better sustainable living conditions. I mean, everybody thought when, and I've seen this all over the world, when we were building communities, will they want to actually move to these places? When we built the houses, or actually a lot of the local contractors built them, these guys were living in pretty poor conditions. We didn't actually have to move them. They started moving them themselves. So they actually moved the whole community into the new villages before we told them they were ready. They were actually there before we'd actually finished painting the goddamn things. And we create long-term growth and wealth. And it's really important to understand that if you do not have that support, it's going to be very difficult to build and operate a mine. It really is. And I've been in that situation. It is very, very difficult. Just a few photographs of some of the things we've done. One of the ones I'm most proud of is we're sub-Sahara, and really, when people live there, they cut down trees because they need it for, cooking, they need it for heat, etc. And so they denuded it. The soil is only a few inches thick, so it literally blows away. And this was an idea that came to us everybody has to have skin in the game with us. The locals had to gather all the stones. We make these into these half-moon structures. It really comes from an idea of the Canary Islands, where a lot of the soil blows away, but they actually grow vineyards in these little sort of half-moon structures. We built all of these. On the next, the photograph above it is all the corn that we've grown on this. Before this was completely barren. Nothing grew on it. So we've created land where no land existed. Paddy fields, because we're able to paddy fields, I guess, because we're able to put down the boreholes and sink them and run them off of solar, we're flooding these little flat areas and growing rice that actually never had rice before. Now they have these renewable crops that they didn't exist before. Women's centres, women are, would you believe, true leaders in these communities. If you don't have the women on your side, my God, you're going to have trouble. But they're also treated a little differently. So we've been building, community centres for them where they can discuss new and interesting things in the community, come up with ideas for us. One was weaving. We're running poultry farms. We will now build an abattoir right beside this, and they will supply our camp. And so all the chicken for the camp will come from these poultry farms, and they will all be to World Health conditions in terms of the actual abattoir, and that'll all be local people as well. So gold is a force of good. It really and truly is. This is not done by who the heck makes computers? I don't know, Dell or any of these people. They don't come here. This is all done by us. We are at the forefront of development, and we should always remember that. We always leave a good legacy. This got out a little bit. We hosted a delegation of the United Nations ambassadors about 6 weeks ago, I believe. We had the ambassadors from Canada, the US, Sweden, Greece, Turkey, and the Netherlands. And they came to our side. Everybody talks about Burkina being dangerous. They didn't come by helicopter or tank. They drove. It's not that dangerous. I've lived and was raised in a more dangerous place, I can tell you. Well, if you're British, it was dangerous. But that's nothing wrong with that. Keeps them on their toes. But they came out to see the community work we were doing. And this has got out beyond this. We actually just got contacted today by the BBC World Service Africa, and the guy's based out of Nigeria, and he'd heard about the work we were doing with the communities at the mine, and he wants to do an interview with our general manager to put on the BBC. So think about that, and when this is the sort of thing that mining should promote as we go forward. It's a great business to be in. I've thoroughly enjoyed it. A few people I've met, maybe. But, I think that it's really important to get that out. And last, what's the precursors to success? Well, that's a hard thing to say, but I'll give you a few. For me, team. I think everybody here talked about the team you have around you. It's extremely important. Make sure they have opinions and strong opinions and not afraid to give them. They should be able to be part of the team and be able to, both give and take ideas. So it's important, that you have a strong team around you. Understand the geology. I am not a geologist. I do know the capital of Spain, but that's about the height of it. But don't fall in love with it. Some guys do, but understand the geology. If you don't understand it, you can't mine it, I can tell you. For me, I'm a dot joiner. I look at the geology, I look at the drill holes, I look at the As Chris says, the 1 meter intercepts for me are absolutely vital. And I look at the block model and I go, bullshit, or yeah, I think I can mine that. Because for me, it's about mining it. The geology can look like what it looks like, but I've got to figure it out. How the heck does it come out of the ground? CapEx, I've got a lot of basic rules I look at. One of the key ones is when I look at CapEx is I look at the tons per annum that they're going to process. I divide it by that. And if it doesn't make sense, I'm going, And when you look at something, just look at the CapEx they publish, look at the tons per annum they're saying, and divide by that, and it should fit within a range. In West Africa, it's 85 to 100. In Canada, it's 130 to 180. And if it doesn't fall within those brackets, you better ask yourself a question. Why not? So if it's 50% of something similar, ask the question. Can you control the costs? I mean, what's out of your control and what's within your control? That makes it. Logistics are extremely important. So can really and truly drive a cost. If you don't have power, you're going to have to bring it in. Then you're going to have to bring in whatever that power needs to drive it, such as diesel or HFO or whatever the case may be. And that's a big cost of everything in terms of operating mines, really and truly is. What will your cost of capital be? I mean, if you go to Randy, it's about 2%. Other than that, it's maybe 4%. Okay, I got a 2.5% discount on that. I've still got the coupon. And as I said, location, that's to do, here I am in Burkina, and it's got its own problems, but the government have been nothing but helpful to us, I can tell you that. It's got a very, very good mining code. Logistics, transportation, logistics, how do I get something to the site? How much working capital do I have to have on that site? I mean, I know mines that have $70, $80 million of working capital tied up because that's when they get deliveries. For us, we tie up about $4 million because the logistics are good. Even though we're in a landlocked country, that's extremely important, is how do I get things to site? People, materials, supplies. Labor, even building things. I look at, now in Canada, if you're looking at a remote site, it's probably 2 weeks in, 2 weeks out. That's very expensive. We run about 6 to 7 weeks in, 3 weeks out. And people don't complain. They're happy to have a job. So the on costs are extremely important. Topography for me, how do I build it? How much earth do I have to move? One key thing I see in Canadian projects is not enough geotech, guys. You go to build it, you start digging a hole, and it's a bigger hole than you think. And then you have to backfill it. And now the winter comes, and now you're trying to put siding on a building, and it's November, and the wind's blowing. That's difficult. So think about all those things. So when you see a press release saying, we're just about to start putting the steel up, and you go, Jesus Christ, it's October. When are you going to be putting everything else up? Things start running awry then. Think about those things. Location is extremely important. And as I said, topography, it can work in your favor or it can work against you. And it's something that I look at when I walk in a site. We're looking at anything, I can tell you, like Kevin McKenzie's just joined us here. When we're looking at things, we don't look at data. We do a site visit, and quickly from a site visit, we'll go, yeah, we should look at it, or no, not happening. So site visit tells you a lot about the people, the communities, the location, etc. Lack of good quality data. I've seen block models built on holes that were 100 meters apart. And you go, how did that happen? Well, it's just anybody can do it. But, and again, I think, Chris, you putting every meter out there, really important. You look at something and you go, I've got 50 meters of 2 grams, including 1 meter of 100. Geotechnical, as I said, extremely important. Not enough geotech work. Even us, we're building a mill beside another mill. I insisted that we had geotech drilling done under every major structure. it was exactly the same data as the previous stuff, but that doesn't matter. That $10,000 can save you $10 million. And time. Metallurgy, like somebody mentioned metallurgy, very important. I don't know, but I haven't watched what your data is, but I know when I was building a heap leach in Argentina, I was putting all of my column work and my bottle roll work into the market, and people didn't understand why. What is that? I said, well, there could be people looking at me, and it turned out I was bought out, but they were looking at that. The metallurgy was telling them this actually will heap leach, and it will heap leach without 20 kgs of cement or whatever the case may be. So put out the metallurgical data. It doesn't mean it's a fatal flaw. Sometimes metallurgy is tough. It's, can I resolve it? Can I fix it? And how much is it going to cost to do it? I always have ratio factors. I look at some studies like 43-1, and the EPCM is 6 million and the CapEx is 400. Bullshit. That's not true. Can't be done. So I look at ratios of engineering, procurement, construction management versus the total CapEx. I at equipment costs versus CapEx. The ratio is there. How do they fit in? Are they real? I've been using rules of thumb now for 40-something years, and they're all good. They're not wrong. Tons per vertical meter, ounces per vertical meter. You look at them, somebody was mentioning some projects that failed. You could tell right away, you can't mine that amount of tons out of that project. It won't work. You look at the grades, you can't mine that amount of ounces. You've either got to develop it all the way down and start mining it from the bottom up, or you're going to be spending huge amounts of sustaining capex just to keep up with the development. There are rules of thumb, guys, and they still exist, and they're good. Don't forget them. I always walk around, make sure I go out into the communities. If they don't look at you, if they ignore you, don't wave at you, don't talk to you, you got a problem. You talk about having an agreement with the indigenous, etc., the First Nations, hugely important, and establish it early on. Don't start drilling holes and ignoring guys around you. They know you're there. They're not stupid. Get to know them. Get to know the key people. Make sure you're well-liked. Make sure all of your team members understand that. It's really, really important. Having a good relations with the locals from the start. Don't start engaging when you think you've got a deposit. Engage early. And you know what? They're generally pretty good people to deal with. I always ask myself, would I be happy working here? If I won't work there, somebody said if you can't get people, I don't know who it was, if they've got 9 executives and they all live in wherever and nobody lives near the project. Was that you, Chris? Yeah, I say the same. Would I be happy here? Well, if I'm not, why would I ask somebody else to work there? I'm not going there. You go there. This place is awful. No, if you don't want to work there, don't ask anybody else to do it. You're the CEO. You make the decision. And that's about it from me. I'm not really going to promote Orezone except some of the stuff we do. We are in production. We did build it on time, under budget during COVID, which was quite an accomplishment. We are building an expansion, so that should be lots of excitement there. And we had a rapid ramp up, very simple ore body. I love simple ore bodies because you can get them going quickly. You don't have to start figuring things out when shit starts happening. Limited capex for exceptional upside and phenomenal ongoing exploration. So our average reserve pit depth is 38 meters. That's sort of nuts, but that sort of shows the unexplored part of the ore body. And it's really because previous management were focusing on an oxide. They were focusing on a heap leach, which actually would not have worked. It did require 20 kgs of cement, and it could only build up to 2 levels. So you would add a heap leach from Burkina to Mali to end up heap leaching it. Strong focused team. I mean, we have only 3 expats on the project. Everybody lives in the area. There's 3 expats. One of them is the security manager. So really 2 key expats. And they are key guys. but they're a strong, focused team. They all live and the money that they earn stays in country. Hugely important. Everybody's seeing the benefit of it, and that's a critical part of having guys who will stay focused and stay with you. They're not looking for the next job or the next position somewhere else. For us, the key drivers going forward is our debt package, which you should announce in maybe a month or so. We're going to link up to the grid power. We are working on diesel right now at 62 cents a kilowatt hour. Wasn't exactly how we wanted to start up. We were supposed to start up with LNG, but our LNG went to the moon and our power supplier went to the moon with it. And but we will be linked up to the grid. Phase 2 construction, we expect to order the mills this week, I think. And that'll get going on the next stage of construction. And then, as I say, continue to drill and add to the ounces. So that's what's going to be the value drivers for Orezone. I didn't even know I had this slide, key drivers here. But anyway, thanks, Vanessa. Okay, that's it. Thanks very much.